Well, hello everyone, and welcome to QC 1000 virtual workshop. My name is Ekaterina Dizna. I'm from the Office of the Chief Auditor, and I'm joined today by my colleagues, David Elam, Lynette Kleindienst, and Carla Anderson. Before we get started, I'll state our standard disclaimer. The views expressed are offered in our capacity as a staff of the PCAOB's Office of the Chief Auditor, but they are our own and do not necessarily reflect the views of the board as a whole, any individual board member, or other PCAOB staff. So a little bit about this QC workshop. Earlier in 2025, we hosted two in-person workshops in Washington, D.C. and Irving, Texas. To reach a broader audience, we decided to convert in-person workshop into two virtual workshops. Part 1 and Part 2 were hosted during the summer of 2025 and covered the same agenda topics as presented during the in-person workshops. Today's session is focused on Part 1 virtual session, and it will be posted on our QC implementation page, along with links to the QC Workshop Handbook. The QC Workshop Handbook includes the presentation materials, various activities, and blank note pages. The PowerPoint slides developed for the workshop and presented in QC Workshop Handbook summarize the content of QC 1000, but it is important to refer to the full text of QC 1000 when implementing the standard. Additionally, please note that all examples and scenarios developed for the workshop are intended to provide a general understanding of QC 1000 and do not constitute legal interpretation or advice. The facts presented are partial, and conclusions will be affected by all the facts and circumstances in an individual case. In other words, you may see a familiar scenario, but you may also have additional facts that apply to this scenario. And those additional facts that are specific to your firm may change the conclusion. A final reminder, if you're watching the recorded version of this workshop, when we reach an activity, feel free to pause the video and complete the activity on your own. Then resume the video when you're ready to hear the debrief. This will allow you to see how your responses compare. Okay, so here's a quick overview of the topics covered in this session. We'll start with providing a quick overview of QC 1000. Focus on QC foundations, like the objective, how the firm's QC system is structured, and required roles and responsibilities. As we go through different sections, like the risk assessment process, the individual components of a firm's QC system that address aspects of the firm's organization and operations, we will not only talk about the requirements, but we will also work through the activities designed to help you start thinking about implementing this in your firm's context. So as a reminder, this is the first session, and another session is recorded separately with additional content. The other session covers the monitoring and remediation process, evaluating the firm's QC system, documenting the firm's QC system. With that, I'm going to turn it over to Lynette, who will take us through the QC foundations.
Thank you, Ekaterina. Now that we covered a little bit about QC 1000, let's ground ourselves in the QC 1000 foundations. We'll start with an objective. Let's take a moment to find paragraph 5 of the standard. We are going to focus on the objective of an effective QC system. As I read it aloud, please note or highlight the key terms: engagements, applicable professional legal requirements, firm personnel, and other participants. We are going to unpack some of the terms in a bit more detail as we go. QC 1000 specifies that an effective QC system provides a firm with reasonable assurance that the firm, each member of firm personnel, and each other participant conduct each of the firm's engagements and fulfill their other responsibilities that are part of or subject to the firm's QC system in accordance with applicable professional and legal requirements. And each engagement report issued by the firm is in accordance with applicable professional and legal requirements. Now let's talk about one of those key terms, engagement. If you would turn or navigate to Appendix A in QC 1000, engagement is a defined term under QC 1000 in paragraph A3 of Appendix A. It is defined as any audit, attestation, review, or other engagement performed under PCAOB standards led by a firm or in which a firm plays a substantial role in the preparation or furnishing of an audit report as defined in PCAOB Rule 1001 P(i)(2). The next term that I asked you to note or highlight in paragraph 5 is applicable professional and legal requirements. QC 1000 defines applicable professional and legal requirements, or as you will hear us call it, APLR, in paragraph A2 of Appendix A, to include professional standards as defined by the PCAOB and rules of the PCAOB that are not professional standards. It also includes to the extent related to the obligations and responsibilities of accountants or auditors in the context of engagements or in relation to the QC system, rules of the SEC, other provisions of U.S. federal securities laws, ethics laws, and regulations, and other applicable statutory, regulatory, and other legal requirements. To provide you with some clarity regarding parts of the APLR definition, an example of a rule of the PCAOB that is not a professional standard is PCAOB Rule 2200, titled Annual Report, which requires you to file Form 2. An example of ethics laws and regulations include ethics laws under jurisdictions that accountants are subject to, such as state ethics laws. This does not include the AICPA's Code of Conduct unless state law is adopted. To be clear, it is not every statutory, regulatory, or other legal requirement, but only those that relate to the obligations and responsibilities of accountants or auditors in the conduct of engagements or in relation to the QC system. Requirements like rules of the SEC that do not relate to obligations and responsibilities of accountants or auditors do not fall within the definition of applicable professional and legal requirements. The concept of reasonable assurance is consistent with QC 20, which is the board's quality control standards currently in place. In the reasonable assurance objective, QC 1000 explicitly mentions the firm, its personnel, and other participants. Throughout the standard or release, we use the terms the firm or each firm. Each registered firm is required to have a QC system, evaluate the QC system, and file a Form QC with the PCAOB. However, as discussed in the adopting release and throughout the standard, the firm is able to use other participants throughout the QC system. A firm that operates in a cluster or network of firms could be sharing resources with other firms when designing, implementing, and operating their QC system to comply with QC 1000. Before we move on to the next slide to discuss the terms of firm personnel and other participants, I would like to emphasize again that under QC 1000, a firm's QC system operates not just over firm personnel, but also over the firm's use of other participants. A firm would need to consider what potential quality risks could result from the use of other participants, including other firms, outside specialist, or external engagement quality reviews. Let's talk about firm personnel. It is a defined term in paragraph A5 of Appendix A of QC 1000. Firm personnel are individual proprietors, partners, shareholders, members or other principals, accountants, and professional staff of a registered public accounting firm whose responsibilities include assisting with the performance of the firm's engagements or the design, implementation, or operation of the firm's QC system, including engagement quality reviews. Professional staff includes employees as well as individuals, such as non-employee contractors and consultants who work under the firm's supervision or direction and control and function as the firm's employees. These individuals include, for example, secondees and lease staff who work under the supervision or direction and control of the firm. Professional staff does not include persons engaged only in clerical or ministerial tasks. Some examples of firm personnel include an engagement quality reviewer who is an employee or a partner of the firm, personnel at a shared service center where the structure is such that the shared service center is part of the firm, secondees and lease staff under the supervision and control of the firm, or specialists employed by the firm. I want to emphasize that professional staff includes employees as well as individuals, such as non-employee contractors and consultants, who work under the firm's supervision or direction and control and function as the firm's employees. One can think of these individuals as having a relationship with the firms that is similar to an employment relationship, even though they are not formally employed by the firm. For example, a secondee from another firm who is temporarily assigned to work at the firm but is fully integrated into the firm's QC system. This individual follows the firm's policies and procedures and is held accountable for their actions and behaviors just like any other firm personnel. In another example, a leased employee who is brought in through an external staffing agency, but who works under the supervision and direction and control of the firm. This individual uses the firm's systems and tools and contributes to the firm's engagements as if they were an internal employee. As another example, a consultant may be revising the firm's methodology, working under the firm's supervision and direction and control, may function like firm personnel. Contrasting, a consultant that is independently working without supervision or direction and control from the firm is not acting similar to an employment relationship. If an individual does not fit the definition of firm personnel, they may be considered other participants. Other participants are defined in paragraph A7 in Appendix A of QC 1000 as accounting firms, foreign or domestic, registered or unregistered, accountants, and other professionals or organizations other than firm personnel whose responsibilities include assisting with the performance of the firm's engagements or the design, implementation, or operation of the firm's QC system, including engagement quality reviews. Some examples include network personnel, other auditors, and specialists engaged by the firm. I do want to point out that the persons performing some roles, such as an engagement quality reviewer or personnel at shared service centers, may be either firm personnel or other participants, depending on their relationship to the firm. For example, an engagement quality reviewer employed by the firm would be considered firm personnel, whereas one that has been contracted from outside the firm that is not functioning as a firm employee would be an other participant. I also want to mention alternative practice structures. Some firms today operate under alternative practice structure models, where individuals may work for the attest firm, non-attest firm, or both. In these cases, it is especially important to see where the individuals fall under the definitions specified in QC 1000. Are they firm personnel or other participants? The final point I'd like to make is that QC 1000 references firm personnel and other participants throughout the standard. The firm would need to understand how other participants fit in their QC system and engagements, and what specific quality risks could be identified and develop quality responses to address these quality risks. Some firms also use resources that are sourced from third-party providers. Now, I want to pause here and note that third-party providers are not explicitly mentioned in the objectives of the firm's QC system. But firms do rely on these resources to support their QC systems, and the standard actually provides a definition for third-party provider. So we are including it here because it ties directly to the next activity we have for you. Third-party providers are defined in paragraph A13 of Appendix A as individuals or organizations other than other participants that provide resources or services to the firm that are designed specifically for use in the performance of engagements, such as purchase methodologies, related templates, and IT applications, or to assist with the operation of its QC system, such as broker and dealer monitoring systems to track personal financial interests of firm personnel. Again, you can see some examples of third-party providers in the blue circles next to the definition. For example, confirmation intermediary, audit software provider, etc. Okay, so let's move on to our first activity. Now that we've went over people resources, we're going to do an activity based on that. You will find a copy of this activity on page 6 in your QC workshop handbook. The circles include different types of resources that a firm might use in the performance of its engagements or in the operation of its system of quality control. Take a few minutes and read the definitions of firm personnel, other participants, and third-party providers in Appendix A of QC 1000 and determine whether each of the types of resources is an example of A, firm personnel, B, other participants, or C, third-party providers. Let's go through each of these examples together. The first example is secondees and lease staff. Do we think this is an example of firm personnel, other participants, or third-party providers? The correct answer is A, firm personnel. The secondees and lease staff who work under the supervision or direction and control of the firm are actually mentioned in the definition of firm personnel. The important takeaway here is that firm personnel doesn't necessarily mean simply those individuals employed by the firm. They don't necessarily have to be employees, they just have to work under the firm's supervision or direction and control and function as the firm's employees. Okay, the next example is internal auditors of the client that provide direct assistance to the client's auditor. Do we think that's firm personnel, other participants, or third-party providers? The correct answer is B, other participants. Basically, other participants is the catch-all bucket for those who assist with the performance of the firm's engagements or the firm's QC system, but do not meet the definition of firm personnel. The next example is specialist employed by the firm. Do we think it's firm personnel, other participants, or third-party providers? The correct answer is firm personnel, because the specialists are employed by the firm. To contrast, if the firm were to use the work of auditor engaged specialist, such a specialist would be considered an other participant. The next example is other auditors. Do we think it's A, firm personnel, B, other participants, or C, third-party providers? The correct answer is B, other participants. Other auditors, as defined in AS 2101 titled Audit Planning, specifically indicates this because other auditors are members of the engagement team who are not firm personnel, who do not work under the direction and control of the registered firm issuing the auditor's report, and do not function as the firm's employee. The next example is engagement quality reviewer from outside the firm. Do we think it's firm personnel, other participants, or third-party providers? The answer for this one is other participants. An individual from outside the firm assisting with the firm's engagements or the operation of the firm's QC system is considered an other participant, as long as the individual does not work under the firm's supervision or direction and control, nor do they function as the firm's employee. If either of these was the case, the individual is considered firm personnel. Because of the objective nature and specific responsibilities of an EQR, we expect that an EQR from outside the firm would generally be an other participant. The next example is engagement quality reviewer from inside the firm. Do we believe it's A, firm personnel, B, other participants, or C, third-party providers? The correct answer is A, firm personnel, because the individual is from inside the firm. In other words, they are employed by the firm. Next, I want to talk about audit methodology provider. Do we think it's firm personnel, other participants, or third-party provider? The correct answer is third-party providers. These groups of individuals or organizations do not work under the firm's supervision or direction and control, and do not assist the firm with the performance of the firm's engagements or the firm's QC system. They provide resources or services for the firm to use. The next example I'd want to discuss is personnel at shared service centers that is outside the firm. Do we think it's A, firm personnel, B, other participants, or C, third-party providers? Personnel at a shared service center that is outside the firm would generally be other participants. Basically, other participants is that catch-all bucket for those who assist with the performance of the firm's engagements or the firm's QC system, but do not meet the definition of firm personnel. I said that personnel at a shared service center outside of the firm are generally other participants. However, we understand that firms use various shared service center structures that are constantly evolving. There may be scenarios where personnel at shared service centers that are outside of the firm are in fact working under the firm's supervision and control and function as the firm's employees. In such cases, the individuals would be firm personnel. The next example is confirmation intermediary. Confirmation intermediaries, such as confirmation.com, are often used by firms and issuers to facilitate the engagement team's confirmation process. Do you think confirmation intermediaries are firm personnel, other participants, or third-party providers? This is another example of a third-party provider. Finally, I want to talk about networks. Do we think they're firm personnel, other participants, or third-party providers? Networks are generally other participants, but this one is tricky as it could depend. That is, it depends on the type of resources provided by the network or personnel from the network. Network entities provide a large array of services and resources to firms, including methodologies, audit software applications, and tools used in the firm's QC system or the performance of its engagements. Network resources can also include people resources because the nature of the services and resources provided by a firm's network can vary. Whether the personnel from the network is an other participant or firm personnel can also vary. For example, an individual on rotation from a network affiliate firm that works under the firm's supervision or direction and control and functions as the firm's employee is considered firm personnel. To contrast, a team from a network affiliate firm performing a component audit for a group audit for which a firm is the lead auditor would be considered an other participant. There are also situations where a firm's network entity provides resources like methodologies or technology tools. Firms will need to consider resources provided by the network, such as these, in the same way they would consider resources obtained from a third-party provider when designing and implementing its QC system. Let's briefly discuss the structure of QC 1000. QC 1000 shares the same basic structure as other quality management standards. including the same 8 components, a risk-based approach to quality control, assignment of individual to be ultimately responsible and accountable for the QC system as a whole, assignment of individuals to 3 roles of operational responsibility that are substantively the same, many of the same quality objectives, and many of the same specified quality responses. If your firm is subject to the requirements of other quality management standards, you do not need to maintain separate quality control systems, one for QC 1000 and another one for ISQM1 or SQMS1. Firms can develop a single QC system for their entire practice that satisfies PCAOB requirements and the requirements of other professional standards to which the firm is subject. While QC 1000 has certain additional or more stringent requirements, firms can integrate these into their unified QC system, eliminating the need for multiple systems. Many of the same policies and procedures developed under another quality management standard will also be applicable for QC 1000. For example, when designing a QC 1000 compliant risk assessment process, a firm can utilize its risk assessment process already developed and under other quality management standards and add any additional quality risks specific to PCAOB engagements. Next, I'm going to spend a few minutes discussing the roles and responsibilities that QC 1000 requires the firm to have in its organizational structure. QC 1000 requires firms to assign 4 distinct roles within the QC system. As I've already mentioned, if your firm is subject to other quality management standards, these roles should have already existed at your firms. The principal executive officer, or the highest ranking executive, is ultimately responsible for the QC system as a whole. Even if there are co-principal executive officers, both are ultimately responsible and accountable for the QC system as a whole. There are 2 key roles: ultimate responsibility and operational responsibility for the system must also certify the firm's QC evaluation of Form QC. These roles are highlighted with the stars on the right side of the slide. All individuals assigned to these roles must be firm personnel. Other participants can assist, but firm personnel must hold and be accountable for the roles. Depending on the size and structure of the firm, one person may hold multiple roles, but roles cannot be shared or split. For example, the role for operational responsibility for the firm's compliance with ethics and independence requirements cannot be split between 2 roles, one for ethics and another for independence. What the firm can do is structure its organization so that the single individual with the operational responsibility is supported by multiple individuals. Those multiple individuals can be firm personnel or other participants. I want to make one practical observation. In today's environment, many firms operate under various practice structures, and these arrangements may create challenges in identifying whether individuals fall within the definition of firm personnel or other participants under QC 1000. It is important for the firm to understand whether these individuals are firm personnel or other participants, as they are treated differently under QC 1000 requirements. For example, as we've just learned, all operational roles have to be assigned to firm personnel only. In addition, for example, QC 1000 requires a firm to provide mandatory training to firm personnel, complete their performance evaluations, and ensure that firm personnel adhere to the firm's appropriate standards of conduct. These requirements do not apply to other participants. I will now hand it over to David Elam to walk us through the risk assessment section.
Thanks, Lynette. Hi everyone, my name is David Elam, and as Lynette said, I'm going to walk us through the firm's risk assessment process under QC 1000. First, let's start with a quick overview of the risk assessment process. The firm's risk assessment process requires the identification and assessment of quality risks annually and applies to the 6 non-process components that address aspects of the firm's organization and operations. These are governance and leadership, ethics and independence, acceptance and continuance of engagements, engagement performance, resources, and information and communication. QC 1000 requires firms to establish quality objectives. Establishing quality objectives is the first step in the risk assessment process and forms the basis for the identification and assessment of quality risks and the design and implementation of quality responses. The standard defines quality objectives as the desired outcomes in relation to the components of the QC system to be achieved by the firm. Quality objectives are specified in QC 1000 for each of the 6 components that address aspects of the firm's organization and operations. In addition to the quality objectives required by the standard, the firm is required to establish any other quality objectives it determines to be necessary to achieve the reasonable assurance objective. Next, firms are required to identify and assess quality risks for each established quality objective. Unlike quality objectives, which are specified in QC 1000, quality risks are not specified in the standard. Instead, firms are required to identify their unique quality risks based on their own facts and circumstances. Hence, quality risks should be specific to the firm and the engagements it performs. Therefore, identifying quality risks as an inverse of the quality objective, for example, taking the quality objective that leadership demonstrates a commitment to quality through its actions and behaviors, and simply identifying a quality risk that leadership does not demonstrate a commitment to quality through its actions and behaviors, generally would not be specific to a firm and its engagements, and may result in a firm designing quality responses that are not effective in achieving the quality objective. And so, instead, the standard requires a firm to obtain an understanding of the conditions, events, and activities that may adversely affect the achievement of the firm's quality objectives. This understanding underpins the firm's identification and assessment of the quality risks that are most relevant to the achievement of the firm's quality objectives. Once the firm identifies and assesses its quality risks, it is required to design and implement quality responses to those quality risks. Quality responses are policies and procedures designed and implemented by the firm to address quality risks. In addition, firms are required to take proactive measures to address new quality risks that may come up between the firm's periodic risk assessments by modifying its quality objectives, quality risks, and quality responses as necessary. To the extent practical, the firm's policies and procedures would not just be retrospective, but also forward-looking, so the firm could anticipate and plan for significant changes. So that covers an overview of the basics of the firm's risk assessment process under QC 1000. I would like to pause and point out that the QC guidance document that we published in November 2024 includes some scalability considerations for firms of various sizes, which may come in handy when working through your firm's risk assessment process. Now let's talk about how a firm might perform its QC 1000 risk assessment. We've already noted that the standard specifies a minimum set of quality objectives that a firm should establish. And so, let's discuss how firms identify and assess quality risks to the achievement of those quality objectives. Foundational to this process is the requirement in the standard that the firm obtain an understanding of the conditions, events, and activities that may adversely affect the achievement of its quality objectives. But what does this mean, and where do you begin when thinking about this requirement? Well, to guide firms through the process, the standard includes a number of specific understandings that are required to be obtained as part of this, which include various understandings related to the nature and circumstances of the firm, as well as requiring the firm to obtain an understanding of the nature and circumstances of its engagements, as well as other relevant information. Now, these are fairly high-level categories, which is important to keep the risk assessment process appropriately risk-based and specific to each firm. However, to further assist firms in obtaining the right understandings for your firm, Appendix B of QC 1000 provides examples of conditions, events, and activities that are relevant to obtaining an understanding of the nature and circumstances of the firm and its engagements. Now, if you could please take a moment to open up the standard and navigate to Appendix B, then we'll spend a moment looking at it together. As a reminder, you can find links to the standard, which includes the standard's appendices, on the Quality Control Implementation Resources page. Okay, so now that you have it open, let's talk about how to use it. So here on the slide, we have an excerpt from Appendix B, specifically paragraph B2. Now, I just want to emphasize something quickly. The underlined text in the red box on screen corresponds to a requirement in the standard, meaning, pursuant to paragraph 20A1A of QC 1000, the firm is required to obtain an understanding of the complexity and operating characteristics of the firm. The text within the yellow box is one of several illustrative examples that a firm might consider. These are not required understandings. However, we believe that they may be helpful prompts for firms when performing their own detailed firm-specific risk assessments. These examples or prompts in Appendix B are not intended to be exhaustive, and they are just meant to be illustrative rather than a checklist for every firm to consider. Whether a particular example is relevant and leads to the identification of one or more quality risks depends upon the nature and circumstances of the firm and its engagements, and how the conditions, events, and activities relate to or affect the operation of the firm's QC system and the performance of its engagements. So what's the end goal here? Why is it so important to obtain this understanding of your firm and its engagements? Well, if an example in Appendix B is relevant, then you might be able to identify a risk for your firm that is related to that example. Now, I do want to be careful to not get ahead of ourselves. I'm not talking about quality risks here. We'll cover those shortly, but the point is that not every risk is a quality risk. Instead, what we're trying to achieve here in this initial step is to understand the conditions, events, and activities at the firm that may give rise to risks that may adversely affect the achievement of its quality objectives, which later we will then have to determine whether these risks are quality risks. Let's do an activity to see how this might work in practice. For this activity, we're going to consider a hypothetical firm scenario and identify some example understandings from Appendix B that might be relevant to this firm. So in this scenario, we have a small size audit firm that has recently expanded its operations by acquiring another firm in a neighboring state. This firm has a simple management structure with a small number of partners overseeing all engagements. The firm is in the process of updating a number of its key systems, and in the past year, the firm took on a new client in an unfamiliar industry. Now, using this scenario, we're going to complete a series of questions in which we'll have to identify the examples from a particular paragraph of Appendix B that might be relevant in this firm scenario. Okay, let's move into our first question. So first, let's look at Appendix B, paragraph B2, which considers the complexity and operating characteristics of the firm. Can you please read through and identify any of the examples from paragraph B2 that you think might be relevant to this scenario? And if you would like to refer back to the scenario information, you can find the previous slide on page 10 of the QC Workshop Handbook. Okay, let's debrief. So you were probably able to identify many of the examples as potentially being relevant here, which I think is a good illustration of there really not being a right or wrong answer when using Appendix B. Again, these are just illustrative examples, and some or many of the examples in Appendix B could reasonably be thought to apply to a firm. For example, just looking at the first three here on the slide, I could see these as being potentially relevant in the context of this scenario. So here I'm considering the complexity of the organizational structure, including the number of managerial levels, the structure of reporting lines, including overlapping or interconnected reporting lines, and whether the firm is centralized or decentralized in nature. And as I consider these points and how they could give rise to risks in this scenario, I'm thinking about, as a result of the merger or acquisition, is there going to be uncertainty within the firm regarding roles and assignment of responsibilities within the newly established firm, which could happen especially if the firm looks to consolidate certain leadership roles across the two firms. In addition, are there risks related to a more complex organizational structure and incorporating the acquired firm's engagements into a single QC system? For example, risks related to independence or the communication of information within the firm. Okay, let's look at another paragraph from Appendix B and answer another question. Next, let's look at paragraph B4, which considers the characteristics and management styles of leadership. As before, can you please read through and identify any of the examples from paragraph B4 that you think might be relevant to this scenario? Okay, let's debrief. Again here, I think that many of the examples could reasonably be thought to apply to this scenario. A few that initially drew my attention for this firm were changes in firm leadership, highly concentrated or distributed management authority, particularly for the size of the firm, leadership tone or conduct, and the extent of focus on commercial goals compared to quality of audits. Here again, as with the last question, I'm thinking about whether there are possible risks related to changes in leadership at the acquired firm, or whether there is a highly concentrated management authority among the small number of partners. In addition, the small number of partners are really going to drive the tone of the organization, and so I might want to think about whether there are any risks related to that. Furthermore, is there a risk of a focus on commercial goals related to the acquisition? For example, if there are any profitability targets that need to be met by the acquired firm as part of the purchase agreement. Okay, let's move on to the next question. Now let's look at paragraph B6, which considers the resources of the firm. Can you please take a moment and identify any of the examples from paragraph B6 that you think might be relevant to this scenario? Okay, let's debrief. So again here, just a few examples that I thought about for this firm were the availability of skilled individuals, the dependency on and complexity of technology used by the firm, and the nature of the technology development and resources to maintain the technology. Specifically here, I'm thinking about whether there are risks related to having appropriately skilled individuals to audit the new clients in an unfamiliar industry, or related to the company updating their key systems, risks related to an over-dependency on or complexity of the new technology. For example, if they incorporate more advanced technologies that would require enhanced trainings, or even more simply, just complexities arising as a result of the integration of two different firm IT infrastructures. In addition, if the technology is internally developed, who are the resources charged with developing and maintaining the system? Are there risks related to that? For example, in a small firm, is there an over-concentration of knowledge that could be a problem if a specific person left the firm? Okay, we'll do one question looking at Appendix B. And let's end with paragraph B12, which considers the nature and circumstances of the firm's engagements. Again, please identify any of the examples from paragraph B12 that you think might be relevant in this scenario. Okay, let's debrief. So again here, just a few examples that I thought about for this firm and its engagements were the extent of the firm's and its personnel's experience with the relevant types of engagements, the complexity of technology used by the firm when performing engagements, and any changes in the external environment affecting the firm's engagements. Here I'm thinking about that new engagement in the unfamiliar industry, and whether my people have the right experience to perform the engagement, and even the knowledge to monitor for and understand the impact of changes in the external environment that are relevant to that new engagement. In addition, if the firm is updating systems that are used in connection with performing audit procedures, is that technology easy for my audit teams to understand and work with? Okay, to close out this activity, we've just highlighted a small number of ways in which the examples in Appendix B could apply and potentially give rise to risks for a firm. In reality, no firm is going to be this simple, and many more examples in the appendix are likely going to be relevant for each of your firms. And of course, we've only spotlighted four of the 12 paragraphs in Appendix B. The others are also going to be relevant for your process. Now let's walk through how you take your population of risks and determine whether they would give rise to a quality risk. Under QC 1000, quality risks are defined as those risks, whether or not related to intentional acts by firm personnel or other participants to deceive or to violate applicable professional and legal requirements, that individually or in combination with other risks have a reasonable possibility of occurring, and if they were to occur, a reasonable possibility of adversely affecting the firm's achievement of one or more quality objectives. The decision tree on the left of the slide illustrates the decision points that need to be answered when making the determination of whether a risk is a quality risk. And note that reasonable possibility term in the definition of quality risks is aligned with the use of the term in other PCAOB standards. For example, AS 1105, AS 2101, and AS 2201. And there is a reasonable possibility of an event when the likelihood of the event is either reasonably possible or probable, as those terms are used in the FASB ASC Topic 450 contingencies. So what is the difference between the risks that we identified previously and quality risks? Well, in addition to needing to have a reasonable possibility of occurring, quality risks are those risks that have a reasonable possibility of adversely affecting the achievement of one or more quality objectives. Said another way, a quality risk by definition is related to one or more of the firm's quality objectives. And so you really cannot talk about quality risks without consideration of the firm's quality objectives. Next, we're going to do another activity where we take some of the risks we've been thinking about for our firm scenario and determine whether they could give rise to a quality risk to a particular quality objective. Before we get started on that, I do want to highlight a couple quick reminders about quality risks. So again, quality risks are specific to the firm and the engagements it performs. And I really want to re-emphasize what I said earlier. Because quality risks are specific to the firm and the engagements it performs, identifying quality risks that are an inverse of the quality objective generally would not be specific to a firm and its engagements and may result in a firm designing quality responses that are not effective in achieving the quality objective, therefore increasing the risk of non-compliance with the standard. So, the more precise that a firm is when identifying and assessing quality risks, the more effective the design of the quality responses, and ultimately the achievement of the quality objective. Okay, so for this next activity and series of questions, we're going to consider the same firm scenario and look at a list of risks, some of which should hopefully sound familiar from the previous Appendix B activity, and identify the risk that you think is most likely to adversely affect the achievement of a stated quality objective. So let's go ahead and move into our first question. First, let's look at a quality objective in the information and communication component, specifically paragraph 53A, which is that information, whether from internal or external sources, is identified, captured, processed, and maintained by the firm's information system to support the operation of the firm's QC system and the performance of its engagements in accordance with applicable professional and legal requirements. On screen, there is a list of 3 risks. And if you could please now take a minute to read through and identify the risk that you think would most likely be a quality risk to the achievement of paragraph 53A in our specific firm scenario. And again, if you would like to refer back to the scenario, you can find the previous slide on page 14 of the QC Workshop Handbook. Okay, let's debrief. So here I was thinking about the risk stated in B, because I do think it would be reasonable if the firm were to identify, as a result of the merger and consolidation of information systems between the 2 firms, that there is a reasonable possibility that information from the acquired firm is not completely and accurately identified, captured, processed, or maintained by the acquiring firm's IT systems, which would have a reasonable possibility of adversely affecting the quality objective in paragraph 53A. Okay, let's try another one. Now let's look at a quality objective in the governance and leadership component, specifically paragraph 25E, which is that the firm's organizational and governance structure and the assignment of roles, responsibilities, and authority enable the design, implementation, and operation of the firm's QC system and support the performance of the firm's engagements in accordance with applicable professional and legal requirements. On screen, there is another list of 3 risks. And again, if you could please identify the risk that you think would most likely be a quality risk to the achievement of paragraph 25E in our specific firm scenario. Okay, let's debrief. So here I was thinking about the risk in C, because again, I do think it would be reasonable if the firm were to identify, as a result of a consolidation of leadership roles post-merger, including changes in individual roles and responsibilities, that there is a reasonable possibility that changes in firm leadership results in uncertainty regarding assignment of roles and responsibilities within the firm's QC system, which could lead to an inconsistent or conflicting operation of the firm's QC system, which would have a reasonable possibility of adversely affecting the quality objective in paragraph 25E. Okay, let's try another. Next, let's look at a quality objective in the resources component, specifically paragraph 44H, which is that technological resources are obtained or developed, implemented, maintained, and used to enable the operation of the firm's QC system and the performance of its engagements in accordance with applicable professional and legal requirements and the firm's policies and procedures. Again, from the 3 possible risks, if you could please identify the one that you think would most likely be a quality risk to the achievement of paragraph 44H in our specific firm scenario. Okay, let's debrief. So here I was thinking about that second risk in B. Again, thinking about the risk we discussed relating to a potential concentration of knowledge of the internally developed IT system, I think it would be reasonable if the firm were to identify a quality risk that internally developed IT systems used in the operation of the firm's QC system cannot be maintained and updated in the future, which would have a reasonable possibility of adversely affecting the quality objective in paragraph 44H. Okay, let's do one last question on quality risks. For our last one, let's look at a quality objective in the acceptance and continuance component, specifically paragraph 38A2D, which is that judgments about whether to accept or continue an engagement are consistent with the firm's ability to perform the engagement in accordance with applicable professional and legal requirements, based on the extent to which the firm has or can obtain resources to perform the engagement. Again, please identify the risk that you think would most likely be a quality risk to the achievement of paragraph 38A2D in our specific firm scenario. Okay, let's debrief. For this one, I identified A because I think it would be reasonable if the firm were to identify, due to the new engagement in an unfamiliar industry, a quality risk that the firm is unable to obtain firm personnel or other participants with the competence needed to perform the engagement in the new industry, which would have a reasonable possibility of adversely affecting the achievement of the quality objective in paragraph 38A2D. Before we move on from quality risks, I want to spend a little more time on an important point that we mentioned earlier. And that is that not all risks will necessarily be quality risks. And there may have been some risks that you thought about in the first activity that you could ultimately conclude might not meet the definition of a quality risk under certain circumstances. Let's take a couple of minutes to talk about this a bit more. First, let's talk about the possibility of occurring. A risk that does not have a reasonable possibility of occurring is not a quality risk. For example, for the examples in paragraph B4 of Appendix B, one risk we discussed was a risk related to changes in leadership at the acquired firm, and that a consolidation of leadership roles post-merger could result in uncertainty regarding assignment of roles and responsibilities within the firm's QC system. While this might not always be the case, every merger or acquisition between firms is going to look different, and there could be a number of different facts and circumstances that impact the possibility of this risk occurring. For example, if the two firms are highly diversified from one another in the types of audits that they perform, for example, if the acquired firm's engagements are such that it's not registered with the PCAOB, and therefore not required to have designed a QC 1000 QC system, then it is probably going to be less likely that there would be uncertainty regarding assignment of roles and responsibilities within the post-merger firm's QC system that could lead to an inconsistent or conflicting operation of the firm's QC system. Therefore, this may not give rise to a quality risk depending on the specific facts and circumstances. In addition, a risk that does not have a reasonable possibility of adversely affecting the firm's achievement of one or more quality objectives, individually or in combination with other risks, is not a quality risk. So, for paragraph B12 of Appendix B, one risk we discussed in the previous activity was if the firm is updating systems that are used in connection with performing audit procedures. We talked about a potential risk that the technology is not easy for audit teams to understand and work with. Well, again, even if this risk were to occur, this may or may not have a reasonable possibility of adversely affecting the achievement of one or more of the firm's quality objectives, depending on the nature of the technology and how it is used by audit teams. For example, if the system is a new internal communication tool used by firm personnel, then it is less likely that any of the firm's QC system quality objectives would be adversely affected by a lack of understanding or difficulties in working with the new technology. It is probably likely that the performance of the firm's engagements could still proceed through other communication methods, even if this risk occurred. So again, under certain circumstances, this may not give rise to a quality risk. Okay, so we've just highlighted a small number of ways in which the examples in Appendix B may or may not give rise to quality risks for a very basic firm scenario. Again, no firm is going to be this simple, and many more factors are likely going to be relevant when identifying and assessing quality risks to the achievement of your firm's quality objectives. And of course, you're going to want to consider all of the quality objectives and not just a select few as we looked at. Next, we're going to talk about quality responses. Quality responses are defined in Appendix A of QC 1000 as policies and procedures designed and implemented by the firm to address quality risks. Policies are statements of what should or should not be done to address an assessed quality risk, and procedures are actions to implement and comply with policies. In addition to the quality responses that firms design on their own through the risk assessment process, QC 1000 also includes specified quality responses. But we're going to set the specified quality responses aside for now and revisit them briefly later. Under the standard, the firm must design and implement quality responses that 1. Are based on the quality risks and the reasons for the assessments given to the quality risks, and 2. Reduce to an appropriately low level the risk that the quality objective will not be achieved. Consistent with the principles-based approach of the standard, the nature, timing, and extent of quality responses depend on the underlying quality risks and the reasons why these risks were assessed as quality risks. Let's do another activity to consider how a firm might design and implement quality responses. Again, for this activity and series of questions, we're going to consider our same firm scenario and select from a list of possible quality responses the quality response that, if implemented by the firm in this scenario, could help to address the identified quality risk. Let's go ahead and open up the first question. First, let's look at the quality risk we identified in the information and communication components, that information from the acquired firm is not completely and accurately incorporated into the acquiring firm's IT systems. On screen, there are 3 possible policies and procedures for the firm to implement. And if you could please identify the one that you think could help to address the identified quality risk in our firm scenario. Again, if you would like to refer back to the scenario, you can find the previous slide on page 17 of the QC Workshop Handbook. Okay, let's debrief. Here, I think a reasonable approach to addressing a quality risk that information from the acquired firm is not completely and accurately incorporated into the acquiring firm's IT systems might be to design and implement a quality response that includes procedures for mapping data from the acquired firm and incorporating validation checks that reconcile information from the acquired firm legacy systems to the new firm's integrated information systems. And so here I had identified the quality response within A. Okay, let's look at another question. Let's look at the quality risk we identified in the governance and leadership components, that changes in firm leadership results in uncertainty regarding assignments of roles and responsibilities within the firm's QC system. On screen, there are another 3 possible policies and procedures for the firm to implement. And if you could please identify the one that you think could help to address the identified quality risk in our firm scenario. Okay, let's debrief. Here, I think a reasonable approach to addressing a quality risk relating to uncertainty in the assignment of roles and responsibilities within the QC system might be to design and implement a quality response that includes identifying the individual who will assume the relevant QC responsibilities or otherwise make clear how the responsibilities and authority will be assigned. And so I identified C as a possible response here. And one approach to do this might include identifying the individuals within the acquired firm that have QC-related responsibilities and authorities, then aligning them with the corresponding individual within the acquiring firm, and ultimately designating and communicating the one individual who will assume all of those responsibilities. Let's move on to our third question. For this question, let's look at the quality response we identified in the resources component that internally developed IT systems used in the operation of the firm's QC system cannot be maintained and updated in the future. If you could please identify from the list of potential quality responses the one that you think could help to address this quality risk for our firm scenario. Okay, let's debrief. For this one, I identified C as a possible quality response to this quality risk. Because if I'm thinking about a risk around not being able to maintain or update internally developed IT systems, I think a reasonable approach to address this might be to design and implement a quality response that includes procedures for documenting the system's development lifecycle for any new systems so that the required knowledge can easily be transferred as new people join the IT team as necessary. This might include, for example, technical specifications, code documentation, and process procedures. Okay, let's move on to our next and final question of this section. For our final question, let's look at the quality risk we identified in the acceptance and continuance component that the firm is unable to obtain firm personnel or other participants with the competence needed to perform engagements in new industries. Again, please identify the response that you think could help to address this quality risk for our firm. Okay, let's debrief. Here, in the context of a quality risk related to not being able to find people with the required competence to perform new engagements, I think a reasonable approach to address this might be to design and implement a quality response that includes requiring the competencies necessary to complete an engagement in accordance with APLR should be identified and planned for prior to accepting a new engagement. This might include a plan to train and develop existing personnel, or a plan to hire or engage people who have specific knowledge in the relevant industries. And so for this one, I identified B as a potential response to address this quality risk. Now, before we move on from quality responses, let's quickly come back to and mention specified quality responses, which are included in some of the components of QC 1000. Specified quality responses are specific policies and procedures that are mandatory for the firms to which they apply. In some cases, all firms, and in other cases, only firms with a larger PCAOB audit practice. Importantly, the specified quality responses within the standard are not intended to be comprehensive and alone will not be sufficient to enable the firm to achieve all established quality objectives. Said another way, firms will need to design and implement their own quality responses through the risk assessment process in order to achieve the firm's quality objectives. So to summarize, we walked through a very simple scenario and used Appendix B to identify examples of conditions, events, or activities that were relevant to obtaining an understanding of the nature and circumstances of a firm and its engagements. We then identified quality risks to the achievement of certain quality objectives as a result of those examples. And lastly, we discussed a number of quality responses that a firm might implement to address those quality risks. I would like to reiterate once more that we walked through a very specific and narrow example. And just because a certain condition, event, or activity exists within your firm or your engagements, this does not automatically lead to the existence of a certain quality risk for your firm. Whether a particular example is relevant, whether it results in one or more quality risks, or how it affects the assessment of quality risks will depend upon the nature and circumstances of your firm and your engagements. Furthermore, whether a particular quality response will reduce to an appropriately low level the risk that a quality objective will not be achieved for your firm is going to completely depend on the specific facts and circumstances of your firm, which would need consideration of much more information and facts than what we covered briefly today. With all that being said, before we move into section 4, we're going to work on one final risk assessment activity where you'll start thinking about how to apply the requirements of a firm's risk assessment process to your own firm. We will not be debriefing this activity. The purpose is for you to reflect individually on what we have covered and start to think about how this could be applied in your own firm risk assessment process. So for this activity, please navigate to page 20 of your handbook. There, you'll find each of the requirements of paragraph 20A in blue text, and in teal text, we've included the additional examples provided in Appendix B. So now please take a few moments using the spaces provided in the workbook under each requirement and set of examples to note down some relevant conditions, activities, and events that are specific to your firm that may adversely affect your firm's achievement of its quality objectives. And once you've taken the time to do this, we're going to move into the next section of the workshop in which Carla is going to walk us through in more detail the components of QC 1000 that address aspects of the firm's organization and operations. Okay, so hopefully you've all had some time to start thinking about your own firm's risk assessment process. I'm now going to hand it over to Carla to take us through the next section.
Hi, I'm Carla Anderson, and I'm going to take you through the next section, which is about the 6 components of a firm's QC system that address aspects of the firm's organization and operations. The materials for this section begin on page 28 of your handbook. Let's go back to this graphic to reorient ourselves with where we are in relation to the requirements of QC 1000. The components we are discussing in this section are circled in red. They are governance and leadership, ethics and independence, acceptance and continuance of engagement, engagement performance, resources, and information and communication. I'm going to give you a brief overview of each of these components and discuss any specific nuances of each of them. Before the workshop, we received a question about the differences between QC 1000 and other quality management standards. So I'll also give you a high-level overview of the differences between the quality objectives and specified quality responses under QC 1000 compared to those under other quality management standards. However, I want to stress that this will only be a high-level overview to get you thinking about how work done under other quality management standards might be leveraged when implementing QC 1000. You'll want to make sure you have a clear understanding of the requirements of QC 1000 specifically as you go through the adoption process. You can also find additional resources on our implementation page that provide a high-level overview of certain features that are unique to QC 1000, as well as a 3-column comparison document that compares the requirements of QC 1000 with the requirements of other quality management standards. After each component's overview, I'll take you through an activity where you'll put what you've learned about the component into practice a little bit. Once we've gone through all 6 components, Lynette will take you through an activity that further highlights some of the similarities and differences between QC 1000 and other quality management standards. I want to point out that, as we mentioned earlier, QC 1000 includes specified quality responses that are applicable to all firms, as well as some that are applicable to only firms with larger PCAOB audit practices, meaning those firms that issued audit reports for more than 100 issuers in the prior calendar year. I want to clarify that issuers refers to companies that file reports with the SEC, and that the reference to audit reports here means audit reports issued for audits conducted in accordance with PCAOB standards. Because the objective of the workshop is focused on smaller firms, we aren't going to be putting any focus today on requirements applicable to firms with larger PCAOB audit practices, and I haven't included any information about those requirements on the slides. Finally, before we move on, I want to remind everyone that you will hear me say APLR in place of the defined term applicable professional and legal requirements. We'll start with the governance and leadership component which begins at paragraph 24 of the standard. You can go ahead and navigate to that paragraph now. This component addresses the environment that enables the effective oversight and operation of the QC system and directs the firm's culture, decision-making processes, organizational structure, and leadership. The quality objectives in this component cover 3 areas: the firm's commitment to quality, organization and governance structure, and resources. Those who are familiar with ISQM1 or SQMS1 will quickly notice that the quality objectives specified in QC 1000 are similar to those for the other 2 quality management standards, with a couple of differences that I'll point out. First, QC 1000, paragraph 25A2, requires the firm's quality objectives to include that the firm's commitment to quality is communicated and promoted by leadership to recognize and reinforce the importance of adherence to appropriate standards of conduct by firm personnel. Additionally, while all 3 standards require quality objectives that say that the firm holds leadership responsible and accountable for quality, QC 1000, paragraph 25B, explicitly mentions consideration of leadership's performance evaluation and compensation when doing so. The governance and leadership component also includes 2 specified quality responses that are applicable to all firms, which are summarized on the slide and begin with paragraph 26. Notice that other quality management standards did not contain provisions analogous to the first one, which directs a firm to establish and maintain clear lines of responsibility and supervision within the QC system. However, specified responses that are similar to the second specified quality response applicable to all firms do exist in those standards. That specified response requires firms to design, implement, and maintain policies and procedures related to complaints and allegations about potential non-compliance with APLR and the firm's policies and procedures with respect to the firm's QC system, the firm's engagements, firm personnel, and other participants. Now I'll have you do an activity to help you start thinking about possible quality risks related to this component. To do this activity, you'll read through the example quality risk on the slide and think about, number 1, a quality objective the example quality risk could relate to, and number 2, which considerations from Appendix B could have contributed to the determination that this is a quality risk. There are materials for this activity on page 38 of your handbook where you can jot down your thoughts. You should also refer back to your copy of QC 1000 for the quality objectives. Before you get started, I want to remind you about a few things. First, I can't emphasize enough that the quality risks we provide during this workshop are examples only, meant to be used for illustrative purposes during the workshop. It is critical that firms identify quality risks that are specific to their own facts and circumstances. Also, for purposes of this activity, we want you to identify only 1 quality objective, but keep in mind that quality risks and quality objectives are not required to have a one-to-one relationship. A quality risk can be related to more than 1 quality objective, either within the same component or different components. Finally, I want you to take note of how specific this example quality risk is. As David mentioned, identifying a quality risk that is simply the inverse of a quality objective generally will not be specific to a firm and its engagements and may result in a firm designing quality responses that are not effective in achieving the quality objective. Go ahead and take some time to come up with your response, and once you've done so, I'll walk you through some examples that we came up with in preparing for this workshop. We identified 2 quality objectives that the quality risk might be related to. The first is paragraph 25A, which states that the firm's commitment to quality is communicated and promoted by leadership. In this case, someone who is inexperienced with being in leadership or performing the responsibilities required of them in that role could hinder the firm's achievement of this quality objective. This quality risk could also relate to the quality objective in paragraph 25E, which states that the firm's organizational and governance structure and the assignment of roles, responsibilities, and authority enable the design, implementation, and operation of the firm's QC system and support performance of the firm's engagements in accordance with APLR. We also identified a couple of different specific considerations from Appendix B that could influence the decision to include a quality risk like this. The first is paragraph B2, which relates to paragraph 20A1A. This is about the complexity and operating characteristics of the firm, including the structure of reporting lines and changes in firm structure and firm ownership. We also identified paragraph B4 related to paragraph 20A1C, which is about the characteristics and management style of leadership, including changes in the firm leadership and the extent to which senior leadership consists of individuals without experience in auditing. Let's move on to the ethics and independence component, which begins at paragraph 30 of the standard. Please navigate to that paragraph now. This component addresses the fulfillment of firm and individual responsibilities under ethics and independence requirements. This component is tailored to the ethics and independence requirements that apply to engagements performed under PCAOB standards. Under QC 1000, ethics and independence requirements include the PCAOB's Ethics and Independence Standards and Rules, the SEC's rules on auditor independence, and other applicable requirements regarding accountant ethics and independence that are relevant to fulfilling their obligations and responsibilities in the conduct of engagements or in relation to the QC system, such as those arising under state law or the law of other jurisdictions. For example, obligations regarding client confidentiality. I want to highlight that QC 1000 does not change any existing ethics requirements or introduce any new requirements. Instead, QC 1000 requires the firm to put a QC system in place to oversee compliance with existing ethics and independence requirements. The quality objectives for this component are summarized on the slide. I want to point out that these quality objectives address compliance with ethics and independence requirements, not just by firm personnel, but also by others who may be subject to the ethics and independence requirements in relation to work they perform on behalf of the firm. This may include, for example, persons associated with a public accounting firm as defined in PCAOB rules, or covered persons of the firm under SEC independence rules that in each case do not meet QC 1000's definition of firm personnel. This can include individuals such as an engagement quality reviewer from outside of the firm, or individuals who are not employed by the firm that perform audit procedures in a current period audit. The use of the term others who may be subject to ethics and independence requirements does not map directly to the terminology generally used in QC 1000. For example, some other participants, such as other accounting firms, are subject to independence requirements, while others, such as engaged specialists, are not. To ensure that the requirements of QC 1000 align with and do not go beyond the requirements, ethics and independence requirements over which the QC system is required to operate, in the ethics and independence component of QC 1000 only, this terminology is used because it incorporates or refers back to the underlying ethics and independence requirements. For example, rather than having quality objectives that address compliance by other participants in this component, the quality objective addresses compliance by others subject to the applicable ethics and independence requirements. Consequently, because these terms are defined in the already existing requirements, firms should already be familiar with their meanings and the implication of the requirements to individuals that meet one of their definitions. The ethics and independence component of QC 1000 includes a number of specified quality responses that are applicable to all firms, which are tailored to the U.S. regulatory environment, including existing PCAOB ethics and independence standards and PCAOB and SEC independence rules. Because of this, they differ from the corresponding provisions of other quality management standards. The provisions of ISQM1 are focused on the International Code of Ethics for Professional Accountants, including International Independence Standards of IASBA, and the provisions of SQMS1 are focused on the AICPA Code of Professional Conduct. The specified quality responses in QC 1000 for this component begin on paragraph 33 and address the 4 areas summarized on the screen. I'll go through each of them briefly. The first is general ethics and independence matters. This specified quality response requires the firm to design, implement, and maintain policies and procedures around identifying and assessing matters that may be reasonably thought to bear on independence, around performing activities with integrity and objectivity, policies and procedures around monitoring compliance with ethics and independence requirements, conducting consultations on ethics and independence matters, monitoring compliance with ethics and independence requirements, and identifying, reporting, acting on, and communicating to external parties about violations and potential violations of ethics and independence matters. The second area of ethics and independence specified quality responses requires policies and procedures for specific matters that may reasonably be thought to bear on independence. This includes identifying firm and personal relationships with restricted entities, including direct or material indirect financial interests that may impair independence. It includes maintaining and making a list of restricted entities available and requiring the list to be reviewed before the firm enters into any relationships, engagements to perform non-audit services, or fee arrangements that might affect compliance with independence requirements. Includes requiring firm personnel to review the list upon certain events that could have independence implications, upon obtaining independence certifications from firm personnel, and identifying matters that require audit committee pre-approval and obtaining it. The next specified quality response requires the firm to make ethics and independence policies and procedures available and to communicate changes to them on a timely basis. And the last specified quality response requires the firm to provide mandatory training on ethics and independence. These specified quality responses are primarily based on previous PCAOB and SEC requirements regarding quality control around ethics and independence. This includes the provisions regarding independence quality controls that were previously included in the requirements of the SEC practice section or SECPS. Those requirements were generally incorporated into QC 1000. In addition, under QC 1000, the requirements previously applicable to SECPS member firms only are now generally applicable to all firms. Let's do a few polling questions for this component. You'll find these polling questions in your handbook starting on page 31. The first polling question, true or false? The quality objectives in the ethics and independence component address compliance with ethics and independence requirements by firm personnel and by other participants. The correct answer is false. The quality objectives address compliance with ethics and independence requirements, not just by firm personnel, but also by others who may be subject to the ethics and independence requirements in relation to work they perform on behalf of the firm. Again, to ensure that the requirements of QC 1000 do not go beyond the ethics and independence requirements over which the QC system is required to operate, the term others who may be subject to the ethics and independence requirements is used in place of other participants. Let's do another polling question. Go ahead and read this question and indicate in your handbook which responses you think are correct. The correct answer here is A and C. Certifications from firm personnel regarding familiarity and compliance with the SEC and PCAOB independence requirements and the firm's independence policies and procedures are required under paragraph 34E, number 1, upon employment and at least annually thereafter, and number 2, upon any change in professional circumstances that is relevant to independence. Certifications regarding familiarity and compliance with applicable ethics requirements and the firm's ethics policies and procedures are required under paragraph 34E upon employment and at least annually thereafter. Firms may choose to obtain these certifications more frequently if they determine this to be an appropriate quality response to an assessed quality risk. The last polling question for this section is another true or false. A firm must provide mandatory training to firm personnel near the time of initial employment and quarterly thereafter that addresses ethics and independence requirements and the firm's ethics and independence policies and procedures. The correct answer here is false. Under QC 1000, paragraph 36, the firm must provide mandatory training to firm personnel near the time of initial employment and periodically, that is, at least annually thereafter, that addresses ethics and independence requirements and the firm's ethics and independence policies and procedures. Let's move on to the the acceptance and continuance of engagements component, which addresses the firm's processes for making decisions about whether to accept or continue an engagement. Please navigate to paragraph 37 now. This component includes 2 quality objectives, which are shown on the screen and are included at paragraph 38. The first quality objective, related to judgments about whether to accept or continue an engagement, is similar to one in ISQM1 and SQMS1, but includes an additional provision that states that judgments about whether to accept or continue an engagement are initially made as part of or before performing preliminary engagement activities. It also provides factors to consider when determining the firm's ability to perform the engagement in accordance with APLR. For example, whether the engagement is permissible under SEC independence rules. The second quality objective, which relates to understanding the terms of the engagement, is unique to QC 1000. This component includes one specified quality response that is applicable to all firms and is very similar to a specified response required by ISQM1 and SQMS1. The specified quality response is about designing, implementing, and maintaining policies and procedures addressing when information is obtained subsequent to accepting or continuing an engagement. This requirement is included in paragraph 40. Now I'll have you work on the same activity for the acceptance and continuance of engagement component. The materials for this activity are on page 39 of your handbook. Once again, read the example quality risk for the acceptance and continuance of engagement component and identify a quality objective the example quality risk could relate to and which considerations from Appendix B could have contributed to the determination that this is a quality risk. Take some time to work on your responses now. Now that you've taken some time to come up with a response, I'm going to walk you through some example quality objectives and the Appendix B considerations we came up with, beginning with our example quality objectives. First, this risk could relate to the quality objective at paragraph 38A that states that judgments about whether to accept or continue an engagement are initially made as part of or before performing preliminary engagement activities, consistent with the firm's ability to perform the engagement in accordance with APLR, and based on and supported by information about the nature and circumstances of the engagement and the integrity and ethical values of the company. Remember that a quality risk could be related to more than one quality objective and vice versa, both within the same or different components. In this example, a quality risk could also relate to quality objectives in the governance and leadership component, such as paragraph 25C that states that leadership demonstrates a commitment to quality through its actions and behaviors, or paragraph 25D that states that the firm's strategic decisions and actions are consistent with and support the firm's commitment to quality. We also identified a few specific considerations from Appendix B that could influence the decision to include a quality risk like this. First, paragraph B3, which is about the firm's business processes and strategic and operational decisions and actions, such as pressure to meet financial targets and commercial goals that could affect resource availability or other aspects of the firm's QC system. Another is paragraph B4, the characteristics and management style of leadership, such as the extent of focus on commercial goals, for example, revenue generation or business development, compared to the quality of the firm's engagements. Finally, paragraph B6, which is about the resources of the firm, such as the availability of skilled individuals. Moving on to the engagement performance component, which starts at paragraph 41. Please navigate to that paragraph next. This component addresses the firm's processes relating to the performance of the firm's engagements by firm personnel and other participants in accordance with APLR. In other words, it encompasses the activities of firm personnel and other participants in all phases of the design and execution of the engagement, including planning, performing, supervising, and documenting the engagement, conducting an engagement quality review, and making communications regarding the engagement. Think of this component as representing the quality control system over the performance of the auditing standards that relate to the execution of the engagement. I'm going to point out a couple differences between QC 1000 and other quality management standards as it relates to this component. Before I do that, though, I want to point out that even if there are differences from other standards, it's unlikely significant changes to a firm's QC system will be required in order to meet the quality objectives of this component because they are largely based on existing QC 20. The engagement performance component includes 4 quality objectives, which are included in paragraph 42. You might observe that these are very similar to the quality objectives for this component in other quality management standards, with a couple of important overarching differences. First, the quality objectives the firm establishes under QC 1000 are with respect to the performance of a firm's own engagements, as well as work the firm performs on other firms' engagements. Other quality management standards do not make this distinction. Next, QC 1000 includes a quality objective at paragraph 42A3 related to the responsibilities for reporting and other communications with respect to the engagement. An analogous quality objective doesn't exist in other quality management standards, but this quality objective retains a concept that is currently included in QC 20, paragraph 18. QC 1000 does not include specified quality responses related to the engagement performance component of a firm's system of quality control. Nevertheless, the firm is still required to identify and assess quality risks and design and implement quality responses that address them. Now we'll do the activity for the engagement performance component. The materials for this activity are on page 40 of your handbook. Please take a moment to complete the activity, and we'll explain the examples we identified. We determined that this quality risk could relate to the quality objective at paragraph 42D that says that engagement documentation is prepared, reviewed, assembled, and retained in accordance with APLR. It could also relate to a quality objective in the resources component, which I'll go over next, about technological resources being obtained or developed, implemented, maintained, and used to enable the operation of the firm's QC system and the performance of engagements in accordance with APLR. You may have started to notice as we work our way through the non-process components that it's almost difficult to come up with a quality risk that only relates to one component. Obviously, this is not going to be true 100% of the time, but the frequency that this happens highlights how important it is to think about your firm holistically when identifying and assessing quality risks, and to understand how interconnected the firm's quality control system is. We identified a couple specific considerations from Appendix B that could influence the decision to include a quality risk like this. The first is in paragraph B6, which is about the resources of the firm, such as the availability of technological resources, the highly centralized environment to manage resources, dependency on technology used by the firm, and the nature of technology development and resources to maintain the technology. We also identified paragraph B11, which is about the nature and extent of resources or services used from third-party providers. Next up is the resources component, which starts at paragraph 43. It addresses people, financial, technological, and intellectual resources, and resources from a network or third-party provider. The resource component includes a number of quality objectives that relate to 5 areas that are listed on the slide. I want to make note of a couple of areas where the quality objectives differ from those in other quality management standards. First, the quality objectives related to the responsibilities and qualities of firm personnel are very similar to the quality objectives in SQMS1 and ISQM1. However, under SQMS1 and ISQM1, The resource's quality objectives refer to personnel, which is defined in those standards as partners and staff of the firm. To contrast, QC 1000 refers to firm personnel, whose definition is much broader, as we discussed earlier, and therefore the quality objectives in this component and other components and requirements of QC 1000 cover a broader population of individuals. Next, QC 1000 includes an explicit quality objective that states that the firm personnel comply with the firm's policies and procedures related to the operation of the firm's QC system and the performance of engagements. This quality objective retains the concepts of QC 20, paragraph 3, but an equivalent quality objective is not included in SQMS1 or ISQM1. The resources component also includes a number of specified quality responses applicable to all firms and related to 5 areas also listed on the slide. The specified quality responses related to the topics I've highlighted on the screen are unique to QC 1000. Some of these specified quality responses were retained from existing QC standards, that is QC 20 or QC 40, and the SECPS member firm requirements. There is also a specified quality response related to periodic performance evaluations of certain personnel, which I've circled in red. A quality response similar to this does exist in SQMS1 and ISQM1. Before we move on, I want to spend a couple of minutes discussing the specified quality response that addresses characteristics of technological resources, which is shown on the screen and included in paragraph 51. The first thing I want to highlight is that when designing policies and procedures related to technological resources, firms are not required to have a separate policy or procedure for each individual technological resource, like I have illustrated on the slide. Instead, based on the nature and circumstances of the firm, a firm might group similar technological resources, such as purchased software and internally developed tools, if those resources share common functions or characteristics. For example, a firm might group technological resources subject to the same approval process based on purchase or development cost thresholds under a single policy. In another example, a firm might group technological resources based on their purpose within the audit process. For example, audit methodology platforms, data analytics tools, confirmation tools, or engagement collaboration platforms. Second, I want to discuss the characteristics of technological resources. A description of capacity, integrity, resiliency, availability, reliability, and security is presented on the screen. In considering these characteristics, firms need to think about each of these 6 characteristics in a way that makes sense within the context of their QC system. The applicability and importance of each characteristic may vary by the type of technological resource the firm's identified QC risks. For example, for a cloud-based audit documentation system, capacity, availability, resiliency, and security may be relatively more important than other characteristics because the system needs to store large volumes of sensitive engagement data, recover quickly from disruptions, and ensure that authorized staff can access it when needed. For an engagement acceptance tool, security may be relatively important to the protection of confidential engagement information. For a data analytics platform used on engagements, integrity and availability may be relatively important to ensure the accuracy of outputs used when making engagement decisions. Again, to reiterate, each firm needs to tailor its consideration of these characteristics to what is relevant to their own circumstances and needs. Now I'll have you do an activity to get you thinking about the different resources used at your firm on engagements or in the QC system. Turn to page 42 of your handbook and take a moment to reflect on the questions about the different types of people, technological, and intellectual resources your firm uses or that are generally used by a firm. Also think about what you learned earlier about the different types of people resources. The last component that addresses aspects of a firm's organization and operation is information and communication, which starts at paragraph 52. Please navigate to that paragraph now. The information and communication component addresses the firm's processes for obtaining, generating, and using information to enable the design, implementation, and operation of the QC system and the performance of its engagements, and for communicating information within the firm and to external parties on a timely basis. This component includes a number of quality objectives that relate to 4 areas which are listed on the screen. You'll notice that many of the quality objectives in this component are similar to those in SQMS1 and ISQM1, with a few additional quality objectives in QC 1000. First, a quality objective related to the communication of firm level or engagement level information, which states that if such information is communicated to external parties, it is accurate and not misleading. Next, there's a quality objective related to information communicated to and obtained from other participants if the firm uses the information in engagements or in the operation of its QC system. Finally, if the firm participates in another firm's engagement, there is a quality objective related to information communicated to and obtained from that other firm. This component also includes 3 specified quality responses that are applicable to all firms. The first is that the firm should communicate in writing its policies and procedures related to the operation of the firm's QC system and the performance of its engagements to firm personnel and to other participants to enable them to understand and carry out their responsibilities. A similar requirement does not exist in other quality management standards. The other 2 specified quality responses are about communicating information about the monitoring and remediation process to firm personnel and about communicating the results of the annual evaluation of the firm's QC system to firm partners, shareholders, members, or other principals, and the firm's board of directors or equivalent. Specified responses similar to these 2 exist in other quality management standards. Let's work on this activity one more time for the information and communication component. Take a moment to complete the activity on page 41 of your handbook, and then we'll explain some examples we identified. First, we came up with 2 quality objectives that this quality risk could relate to. First, the information and communication quality objective at paragraph 53B, which states that the nature, timing, and extent of information communicated to firm personnel enables them to understand and carry out their responsibilities. It could also relate to the governance and leadership quality objective at paragraph 25E that says the firm's organizational and governance structure and the assignment of roles, responsibilities, and authority enable the firm's QC system and the performance of engagements in accordance with APLR. Two specific considerations from Appendix B that we identified that might influence the decision to identify this as a quality risk are paragraph B2 about the complexity and operating characteristics of the firm, including the structure of reporting lines and changes in firm structure and firm ownership, and paragraph B3 about the firm's business processes and strategic and operational decisions and actions, including mergers, acquisitions, and divestitures. That's it for me, and next I'll turn it over to Lynette, who will talk about some commonalities among QC1000, ISQM1, and SQMS1.
Thank you, Carla. Now that we've discussed the quality objectives and specified quality responses for each of the non-process components, let's do an activity on how the quality responses that your firm develops could be a common quality response for QC1000, ISQM1, and/or SQMS1. As I previously mentioned, QC1000 does not conflict with the requirements of ISQM1 and SQMS1. Firms may rely on policies and procedures developed under other QC frameworks as long as they meet the requirements of QC1000. I want to highlight again that our implementation page, we do have a document titled Practice Aid providing a high-level overview of certain features unique to QC1000 that may be beneficial. In your QC Workshop Handbook, starting on page 45, you have a sheet that includes 3 comparison columns for QC1000, ISQM1, and SQMS1, with quality objectives for some of the components. Before we dive into this example and activity, I do want to highlight that this is an excerpt and the full document can be found on our implementation page. Now let's look specifically at the acceptance and continuance of engagements component. On the screen, I've identified a quality objective in QC1000, ISQM1, and SQMS1, where a firm could develop a common quality response. That is paragraph 38A2D of QC1000 and paragraphs 30A I2 and 31A I2 in ISQM1 and SQMS1, respectively. The quality objective relates to the firm obtaining resources to perform the engagement. In your handbook, these quality objectives are also highlighted in gray. In our example, the firm identified a quality risk that the firm may accept new engagements in a new, highly specialized industry without adequately assessing whether it has or can obtain the necessary resources to perform the engagements. A firm's possible common quality response to this quality risk could be to require confirmation of its ability to obtain resources with the specialized skills needed for a new industry and to have firm leadership review and concur with the confirmation before accepting the engagement. Please note this down in your handbook as an example. Again, I want to highlight that QC1000 does not conflict with the requirements of ISQM1 and SQMS1, and for many of the quality objectives, the firm can develop common quality responses. Now, let's do a similar activity. In your QC Workshop Handbook, starting on page 48, you have a worksheet that includes 3 comparison columns for QC1000, ISQM1, and SQMS1, with quality objectives for the engagement performance component starting on page 51. And you'll see quality objectives for the information and communication component. At the beginning of each of these components, we have identified a specific quality objective across all 3 standards and a quality risk. I've also identified the paragraphs and the quality risk on the screen. I'd like you to review the quality objective and quality risks for each of these components and develop a possible common quality response. As you are doing this exercise, I also want you to look at other quality objectives in the component and notice how many of them are similar across all of the standards. Please take a few minutes to develop a possible common quality response for each quality risk in the 2 components identified on the screen and in your handbook. Let's take a few minutes to debrief the two quality objectives and quality risks. Before we do that, just a reminder that there may be multiple quality responses for each quality objective based on the quality risks. One quality response may be common across all of the standards, but there may be additional quality responses necessary to address the risks specific to one of the standards. Also remember that this is being looked at in a vacuum, and you would need to think about your own firm. This activity is for you to start thinking and seeing the similarities that you can leverage your efforts while implementing the standard. I also want to remind everyone that the specific policies and procedures necessary to achieve the objectives of the QC system may vary significantly across firms, depending on their size, the type of engagements they perform, and other factors. QC 1000 is sufficiently principles-based and scalable that firms will be able to pursue an approach to QC that is appropriate in light of their specific circumstances. The nature and extent of these processes would be commensurate with the firm's quality risks and would therefore vary across firms in nature, scope, and complexity. We have a discussion about scalability on pages 54 through 68 of the adopting release. We are covering more scalability considerations and examples for small firms with relatively few PCAOB audit clients as it relates to monitoring and remediation process in session number 2's virtual workshop. Okay, let's debrief the potential common quality responses. On the screen, I've also included a possible common quality response for each of the scenarios. Feel free to write it down as I walk through them. For the engagement performance component, the quality risk that was identified related to the firm performs multiple engagements in multiple industries, and there is a reasonable possibility that differences in professional judgment are not brought to the appropriate individual to resolve. The relevant quality objectives that we identified related to differences in professional judgment in both QC 1000 and quality objectives in ISQM1 and SQMS1. A possible common quality response that a firm could develop and design and implement to address this quality risk for those quality objectives would be that the industry leader for each industry is identified as who should be contacted when there is a difference of professional judgment to resolve such matters. In the information and communication component, the quality risk that was identified is the firm's communications under required auditing standards to the audit committee or those charged with governance is incomplete, inaccurate, or does not comply with auditing standards. We identified quality objectives in QC 1000 and ISQM1 and SQMS1 that relate to information being communicated to external parties in accordance with applicable professional and legal requirements or within the relevant standards. A possible common quality response could be that a firm requires all communications to the audit committee or those charged with governance to use standardized templates in compliance with the applicable standard that is reviewed and approved by the engagement partner and the engagement quality reviewer. As a reminder, our QC implementation webpage is located on the PCAOB's website. We've included a link in the resources at the beginning of the handbook. You may go ahead and click that link to access it and navigate to the website. We continue to update it as we develop additional implementation resources. These include knowledge tracks, a staff presentation on the overview of QC 1000, as well as staff guidance documents covering aspects of QC 1000 and the related amendments to AS 2901, and staff presentation videos on different components and topics in QC 1000. If you subscribe to PCOB News, you will receive a notification when this page is updated with new resources. If you have not already subscribed, now is a great time to subscribe in the upper right-hand corner. I know we've covered a lot of material today, and if you have any questions, there is a way to reach us. There is a phone number and contact form at the bottom of the QC implementation page. Thank you and have a great day. I hope to see you at the next QC virtual session number 2.